Hello, Warriors. Let's have a great week. How's everyone doing? Hello, Kevin, Ren, Brock. How are you guys? Hugo, how's it going? Didier. Hello, Arena. Why is Monday a happy Monday? I had to get up at 4 in the morning. All right, let's talk about making money. The beginning. Okay. So, a couple of things. There you go. So every day is happy day. All right, starting off with the euro, just something I want to alert you guys to that we could be setting up on the 2-hour TF potential third drive up here. Maybe we go 1940, 1950. Everyone see this? Here's one, there's two, and maybe we get a three. When we move over to cable, had a terrible week with a weak dollar. It did nothing, and but go down last week. We've had a nice little bounce here. I'm thinking this too could be a fade between here and 38.13. Maybe tomorrow. If it's today, I'll know later if we get some negative action. US dollar yen is lower, trying to hold the low of the break last week, trying to put in a higher low. So we'll see if that manifests or we get one more low in, under 109. So, this was holding Blake's breakout here. Okay. And Canada is on the docket for me this week. I'm thinking that we could take out the 50% retracement here. It was a nice bounce off 50%. I want to see what happens between 61.8 and 78.6 in Canada. And with that, what might make that happen along with some more dollar weakness would be oil is up today, could be threatening this recent little downtrend it's in. And you guys know I've been talking about I'd like to see the 62 stops taken out above these highs here. Everyone short with stops over 62. I'd like to see that taken out. Maybe we go 63, 64 for a shorting opportunity. I still haven't done anything in the S&Ps because my trigger is waiting for, and it may not happen. Maybe I'll miss the first leg down. Uh-oh. Successive highs that we've had here in the S&Ps for a while now, and NASDAQ didn't quite make a new high up here. It's more like 13.9. The high up here was 13.908. So we didn't quite get there. We got to 855. So I'd like to see them take out the stops above the high. And should that happen, that would be kind of timing for S&Ps, but why not sell the weak sister, something that's taken a lot of energy just to get back to new highs. So that's what I see there. And looking at gold, we had that nice little pullback from major resistance, 1758, and we're bouncing here. Could end up being a fade at 1750. I don't want to be short above last week's highs because I think we're turning good if that happens, but there could be a shot at 1750, and silver is even a little bit weaker. For this was last week's high, decent break. So let's see what happens up here tomorrow. I think that's about all I have to cover here, but this is something that I'm really waiting for. Like to see it happen here and get this break back under this 50% level that we've had last week, because I still think Canada, even though I'm not sure what kind of formation it is, I thought it was a falling wedge, still could be. My bet is that fib retracements are going to be the play, and I'll be wrong under the low of the move. The only other scenario that would be bullish would be a three drive, but might be a little bit too spaced apart. So this is something I'm looking at for sometime this week, should it happen. It's like what Blake says. You imagine, what you would do if a certain scenario unfolds, and then you're ready to execute. So most of my ideas are developed over the weekend, and then I just have to be patient for my spots. And right now, I don't have anything that I was looking at this weekend telling me to click my mouse. So currently flat, but those are some of the things I'm looking for. I want to close it with one more thing before I hand it off to Blake. And you guys know I hardly ever talk crypto, and Bitcoin is up, I think we're on the verge of new highs here. Not quite. The high here is, hold it, 61,000. So we're about 800 bucks away, 61,788. So that would still be about another $1,500. But can you guys see what I think might be happening? And I still think there's another high left here. This is your daily chart of Bitcoin. So what I would say, Jane, is that if you were smart enough to buy it lower and both naive and greedy enough not to take any profits on this into this push above 61,000, okay, that I don't think you're going to get hurt taking profits at new highs here. There is a possibility if this 3-drive manifests that we could at least get back to the bottom of the first drive here at 42. And I don't think you could rule out on the top of the potential of correcting back down towards 35,000. I think Blake mentioned he'd be a buyer at 30,000 if it came back down to those levels. So anyway, congratulations if you've ridden this tsunami wave. It's been beautiful, but this is really kind of the first warning sign all the way up, right? So pretty clean, low formation setting up there in Bitcoin. And you know what? It's never a profit till you take it. So that's my advice. It may be a little bit too scary to short, but this third drive formation is telling me it's time to take something off the table if I was long. I'm such a crypto expert. I bought GBTC at 5 and sold it at 7.5. It's now trading, I don't know, 60, 70. Anyway, that's my views coming in. We should have, our guest today is Thomas Malinan. And if you recall, hope Thomas shows today, he was looking for some type of euro crisis beginning this month in April with Ground Zero, the Italian bank. So stick around to get an update on his narrative. And with that, Blake, hope you had a good weekend. It wasn't that hot in Phoenix this weekend, was it?
Oh, it's nasty. Good morning.
Already?
It's
all
nasty.
right.
Well, anything
All right.
over 90 is nasty to me. No, it's
All right.
I'm being a little sarcastic. It's
Yeah.
it's warm. I
Yeah.
mean,
Okay.
it's not horrible. I mean, it's gonna be worse. So
Yeah.
right.
Easy. How about that? Can you get long temperatures in Phoenix in April and then take profits on Halloween?
That'd be the best trade of
It's a
the
seasonal trade.
year. Every year, the seasonal. I get long because I know I won't lose. I know
Live
I
there.
won't lose. Hey,
Yeah.
I want to start off by saying thank you guys for all the comments and retweets and everything for the week ahead video. I hope you guys enjoyed it. And it was after I got finished filming, I was like, oh crap, I didn't even mention what's happening this next week. I didn't even mention the fact that we have all this data coming up this next week, and we have like retail sales and some inflation data, and we have Aussie employment, and the RBNZ is meeting. I didn't even mention any of that. And anyway, I just want to say I actually responded in the comments So hopefully some of you guys got to see that. It's like, duh. So anyway, but hey, I want to talk a little bit about you were just talking about crypto, and
Yeah.
I'm still very much in the camp of watching Bitcoin and Ethereum. And one of the things about like Ethereum this weekend is actually we hit new highs, and then and by the way, when we hit new highs, we didn't. Whoops. We finally hit the 161% extension because we hadn't hit it before. And I'm like, are we actually going to make it up there? We did. And now we're kind of like forging a little intraday double top. Obviously, Bitcoin just, trying to take out the highs, but, I would say it's probably wedging. But, you can't get bearish yet. I think you do, but below the channel support. And as Dale was just saying, yeah, I'd be a buyer lower. I mean, but at the same time, I don't look at Bitcoin as a trading instrument, but I would be interested in buying Bitcoin and putting it away at much lower prices. I just don't know if I'm willing to pay here. But if I was trading it, I would say we're setting up in a nice, we got a wedge. So where the breakout point is
Yeah.
basically above the highs, maybe above this trend line. And if we get below, 56,000 or so, you're gonna have a breakdown. So I like the setup there. I do. Now I wanted to address a comment that was made in the chat room this morning. And one of the best things in here, so you guys can kind of see the question. I'll point out this is our Forex Analytics chat room, right? So let me point this out really quick. Oleg, wait, where he goes. Oh yeah. So Oleg asked a question. So because I said, hey, I'm going to short the Aussie dollar here. I sold it this morning at 76.30. Okay. And I said, wherever it is, I'm going to set it with a tight 30 pip stop loss. I forget, where it is. I have to go back and, look through all these, but you get my point. I said, well, I'm going to put in a 30 pip, tight stop loss. And so Oleg said, or asked, so if 30 pips is a tight stop, what's a big stop, like 100 pips? And that is the way I'm trading currently. But you know what? It's starkly different from how I was trading about 2 months ago, when I was trading much bigger size. So it all depends on, your strategy and what you're attempting to do. Like I'm trading the Aussie dollar, and and let me also clarify, I'm not really scalping the market now. I mean, if I get a trade where I'm profitable in a trade really quick, I might scalp out of it because I'm like, oh, it's moved pretty aggressively for as little bit of time as I've been in it, and I might take profits rather quickly, if I'm in the mood. But I don't necessarily trade and scalp the market, because it's, for me, I'm always focused doing something else too. When you have like Forex Analytics, it's like, not only am I in a chat room and am I trading, but I'm also like addressing comments from traders. The people send me emails. We're trying to, organize this and that and this and that for Forex Analytics and other things that we do with our company. I don't always have time to really monitor my trade, tick by tick. So because of that, I tend to be a little bit more, loosey goosey with my stops. So like looking at this chart, and I know that while we're below this channel support, I want to be short. And since, if you're looking at the channel, right, this is, you can think about your risk being here, your reward being somewhere down here. So let's calculate that. So let's say, you know, my stop loss, or let's say my entry point, excuse me, for the Aussie dollar is 76.30, and my stop loss is 76.60. I'm just using these numbers rounded out, and my target is 74.50, somewhere down here, or, you know, even 74 cents. Then I have a 7-to-1, almost 8-to-1 risk reward ratio.
A great RR.
Let's say I'm trading 100,000 in currency. You know, I'm risking 393 Aussie dollars to make 3,000 Aussie dollars. So what is that in US dollar terms? You know, what is risking $300 in Aussie dollar terms is risking only, you know, $250 or $300, right? So risking $300 to make 2,500 or so, 2,300. That's a good risk reward by any measurement, right? So that's how I'm looking at the Aussie. I'm not looking at the Aussie like, oh, I'm going to put in a 30 pip stop, and then I'm looking for, you know, 10 pips and I'm going to get out. That's not the way I'm approaching it. So I hope that made sense. And it's the way I'm trading currently. And you know what I have to say about that, Dale?
What, buddy?
The way I trade is the exact way you should always trade. I'm joking about that. You know, that's a joke.
I mean, it's nice that you point out the RR on trade. Let me ask you this.
Yeah.
Will you take 2 to 1?
Before you ask that question, let me just say that the way I trade is not the end all be all either. It's just the way that I tend to approach the market at this moment in my career. It's like I tend to be, you know, a little bit wider stops. I can let the trade move for me. I don't have to monitor it every second of the day. But that's the way I'm attacking the market right now. And it's different than, you know, how I approached the market a few months ago. So anyway, I'm sorry, Dale, go ahead and ask.
No, that's okay. What's the minimum risk to reward that you will take? 3 to 1? 2 to 1?
Not necessarily. I mean, first of all, I always say that the more risk reward, the better, because you don't know what's going to happen. Like, let's just say for argument's sake, I have this huge risk reward. I'm like, I'm gonna sell it here, target here, and then I'm, you know, getting in the trade. And let's say by Thursday, you know, the Aussie dollar is challenging the support, right?
Right.
It's challenging that support. And I'm like, it's Thursday. We've got Aussie employment coming up. What I do is I end up taking partial profits, moving my stops to break even. And let's say the Aussie dollar, Aussie employment's a blowout number, and it comes back and rips back up and, you know, takes me out. Well, you know, I can't factor for that at this moment in time.
Right.
So
it changes.
So it will change
from where you initially enter. Yeah.
What's that?
Yeah, from where you initially entered, the RR can change based upon taking, you know, the risk reward could end up, if you're in a break-even situation, being even huger too.
Yeah,
right?
yeah. So you know, how about this situation? You end up you know, getting short, and you know, the Aussie gets down towards these lows, and you know, I close out part of it, and let's say, you know, the Aussie numbers are god awful. It's just a huge miss, so it starts breaking down, and then next thing you know, the Fed announces, you know, that they, you know, or let's say the Fed gets really, you know,
aggressive,
hawkish on the U.S. economy, and then, you know, risk assets start crapping the bed, and originally I'm like, okay, I was targeting 74, but I'm really actually just going to be targeting channel support down here at the 618 at 72 cents, or 78% retracement at 78% retracement down at 72 cents down at channel support. So, you know, my it's to my benefit and to anybody's benefit to have the best risk reward possible when you're entering a trade, because you don't know what you're going to be faced with, you know, as we move
As
along.
time
So,
goes by
yeah,
on the
yeah,
trade. Yeah.
exactly. So anyway, I hope that helps. And that was specifically addressed for Oleg in our chat room, but I thought it would be a nice educational moment for all of us here and for those of you that are listening in the Face webinar. So I hope you guys enjoyed that. Yeah.
Nice, coach.
Oh, thanks. Hey, let's see if Steve and Stelios are around and they have any input regarding what I just said. So Steve,
Good
Stelios,
morning.
morning,
Good
guys.
morning, Stelly.
Good morning.
Hey, I just want to say that for me, the most important thing is to be able to, you initiate a trade, you put your stops, you have a plan. The important thing is to be able to amend that plan as things evolve. And also what I do is I use very, very different strategies depending on what I trade. So if I trade currencies, I'm usually very like euro yen that I've shorted. I have a relatively tight stop for my standards. But when I trade things like silver, which I always trade long, and I it's something that I know that economics 101. This will eventually always go higher. It's something that is like math 101. So the way I trade it is unleveraged, and I have no stops at all. And that obviously is a very different thing. I have my last silver long, which I've been covering here on Face for months. I waited around about 18 months for it to perform, and at some point during the COVID crash, I was down like 15%. And then because I had no stops and I was unleveraged, so I had no nobody was forcing me to close the trade. I rode it, and just after the COVID crash, I ended up taking nearly 50%. I was down 15%, then I closed the trade roughly 40 to 50% because I closed partially. I always do that. So it's different. For me, it's a different stop strategy depending on what I trade and depending also on conditions. Conditions change, you should be changing. That's just my view.
Yeah, that makes a lot of sense, Stelios, and you have to be flexible. You have to be.
Yeah.
So, Steve, how's it going this morning?
Good, mate. How have you been?
Good. Anything you'd like to add to what we were just discussing?
Not really. No disagreements there.
Okay. All right. Well, then. All right. Well, then. How's it? How are you guys going? How are you guys? It's Monday. How are you guys doing today?
Good. Weather has improved a lot, so I'm just wondering why aren't we at the bits? No, I'm kidding.
You're wondering what?
Why aren't we at the bits?
Oh yeah, exactly.
Steve, you have to be careful how you say that. You should say beach, not bitch.
Yeah. Okay.
These Greek accents.
I
By
have
the way,
the luxury of
I,
having of still having a
Not
Greek
being
accent.
at the beach is a bitch. So.
Yeah, it's a bit.
there you
Yeah. Exactly.
By the way, I am
Steve,
going to
what's
get my
your
vaccine
highest?
on Thursday.
You are, Blake? Good.
Yep, I'm finally gonna get. I got an appointment, so yep, I'm gonna go get my
J&J?
Johnson and Johnson shot. So I'm
Yeah.
excited.
Okay. All right.
Nice.
Yeah.
Okay.
So I'm in line.
All right.
Yeah. Unfortunately, you see this COVID situation. It's really these variants are picking up everywhere.
Yeah.
And I was talking to my mother-in-law who's a family physician. She administers COVID vaccines, but she's only had like Moderna in her office, and she's like, there's all these variants out there, but if you do have a vaccine, it's going to help curb the symptoms that you get even if you pick up a variant. It's just
Exactly.
It's that extra protection. So make sure you guys are out there trying to get your vaccines if you can. And I know it's not so easy if you're in different parts of the world, like Greece, for example.
So my wife was a little, nervous after she got the shot. She's, conservative Republican. We're kind of, opposites there. But she came out and said, "Well, were you worried?" And she said, "No." She goes, "But I had a good immune system, and now who knows with this? They're playing with your DNA." I said, "Well, how else, honey, are we going to have a zombie apocalypse?" I calmed her down. Anyway.
Hey, I guess I'd pass it over to Steve and Stelios and see if there's anything that you guys would like to cover today. I'm really just I'm focused right now on a couple different things, but I talked about it during the
Week ahead.
week ahead video. Daily sentiment index for the
VIX?
S&P was like at 90 or 91. Volatility was at 10.
10.
Very
Yeah.
very extreme readings, and so you have to be really careful about being long risk. And I know that just because I say that doesn't mean you should be out there shorting the stock market either. I mean, the stock market continues to stay strong. I'm just saying that we are getting into some, I know everybody will say this, and I thought this last week. I'm like, oh, it's getting kind of frothy, and we're frothy. We're more frothier today. So
Yeah.
a week later, so it's
Yeah.
not like, hey, you need to run out and just start shorting the market. It's, hey, you got to start being really careful. And I can't get away from the divergences that we're seeing in these commodity currencies. Whether you're talking about the Aussie, the even the Kiwi. I mean, none of these commodity currencies are following risk assets higher, and it wasn't the case last week, and it's not the case this week. So just have to be really careful. What do you
It's
guys?
so
How do you guys
close,
feel
I
about
can take-
equities here, Steve
Yeah.
Stelios?
So close I can taste it.
I'm not touching them. I'm not touching them.
Yeah, I'm not touching them
I
either.
can't
We're
buy
getting
them, I can't
close
sell
to
them.
we're getting close to some important resistances, but that's not the first time it has happened recently, right?
No, every time you
And-
get to a resistance, it ends up being like a speed bump.
Exactly. So as Telio said, I'm not touching them. I mean, unless I see like a big reversal, I'm not touching them, because on the other hand, buying them here as well is just, is just bad trading. So, if you're not long or you're not short, you should do neither, in my opinion. Not yet.
And so, and this is the problem with this environment, and this is where, and I'm just going to get into like kind of generalizations of certain periods of my career over the last 20 some odd years. This is where the market pays for bad behavior, and this is what creates really
Correct.
bad, habits, and this is what creates major reversals too, because everybody's attitude at this point in time is the market can't go down. If I buy it right now, I can sell it tomorrow and I can make money. And every time it dips, I'm going to buy it. So what happens, is you get everybody long up here. We actually start to break through some support. They lose money, but they're like, I'm going to buy the dip anyway. Then they buy the dip and that doesn't work. And then they sell. And then it ends up being more of an avalanche type of situation. And I'm not saying that that's going to happen this time. I'm just saying when you see big reversals in the market, that's usually spawned from, the behavior of the bad behavior of trading. And then it just perpetuates going the other direction at some point. And I'm not going to say that this is the point either. Right.
Yeah, this is the result of 13 years of moral hazard. And, for every year that passes, even more people are inclined to just, follow this Pavlovian behavior, because, it's been prevailing for such a long period of time that we probably have generations of traders nowadays that have never actually seen a vicious market.
Oh,
Well, they
no,
saw
yeah.
the crash in last spring.
Yeah, but that lasted
Yeah.
very little.
Yeah,
And
true.
what was left behind in their mind is that, if you panicked and sold, you're an idiot. That's, I think, that's the lesson they think they should have learned.
Yeah, and that was a generational low, and I can't believe I missed out. So now it's all FOMO. So
Yeah.
but that's that is going to be the prevailing attitude, and the problem with that is we could end up being in a sideways market for a long time at some point. And anyway, so.
Yeah.
Just be careful. Be careful chasing risk up here. We're almost at the 161% extension of the COVID move. I mean, this is the
Be right
COVID
back.
move, 161% extension. we're coming into it. We're only 25 points away from that on the S&P. And as I pointed out in the week ahead video, we're up 12% for the year. That's people don't
Crazy.
understand. Those are good
Not to
returns.
mention that that we are over 80% higher from 13 months ago, right?
Oh yeah, yeah. So anyway, Dale, I guess you have your interview, so I don't want to take away any more time. But before I let you go, guys, I just want to say that if you want to try to get Forex Analytics for free for a period of time, visit our sponsor, Pepperstone Securities. Open an account right here, a live trading account. You can get up to 4 months free based on how much trading you do, and then I'll see you in the chat rooms. And if you're in the US or Canada, open your account with Forest Park FX. They're like the concierge of brokers. If you're not getting a cash back on your trading, then you are not talking to the right people. That's why you have to talk to Forest Park FX. Tell them we sent you, and just give them a call, or you can contact them through their channels here. There's where's the email? Oh, here it is. You can talk to them on Skype or send them an email. This email actually goes to them. So Dale, have a great interview. Steve Stelios, thanks for joining me and your comments this morning. And everybody have a great trading session.
And if you can't see the forest from the trees, contact Forest Park FX, and they will guide you down the trail.
There we go.
All right, and I'm waiting. Thomas, are you in the house? Tomas, Black Swan guy. All right, so I see him tweeting. I don't know if he's in the house, guys. I told him we're on time change. Let's see what happens here.
Let me look for him.
Do you see him, Steve?
I'll just have a look. Wait.
Thomas MT Malinin, and his first name is Thomas.
Yeah, found him.
Okay, beautiful.
I'm
Was
promoting
it under
him.
Thomas?
Yeah, Thomas Malinen.
Huh.
There he is.
Come up under attendees for me. Okay.
I just asked him to unmute.
It's great to have.
Can you hear me?
Yeah.
Yes.
Tomas, welcome back.
Thank you. Nice to
How
be
are-
here.
All right. So, I don't know how long we were been talking. Did it go back to last summer or so when we first started having these conversations, or spring? And, no one could expect someone to pick the month of crisis beginning to the fuse being lit. But, you were talking April for a long time. Here we are. Happy spring. So if you want to share your screen, we could talk about one of the my favorite bird, the black swan. No, actually, the eagle is my favorite bird. But
Someone else is sharing the screen. I can't do it now.
Okay, I think Blake is sharing the screen. There you go.
Oh,
Now
okay.
you can.
Yeah.
All right.
Yeah. Okay. We're at it.
So, are you still suspecting the Italian banking system to be ground zero for this? It's just one of the possible scenarios, right?
This one. Can you see the screen now?
Yeah, there it is. 2021, the year of the black swans.
Well, it's well, in Europe, how would I put it? We now consider that the Italian banking sector is one of the main crisis points, but there are actually so many now all over the world that it's really difficult to put any finger on where it could start, because now we are also considering that it may be a financial shock in the US, or a political shock in the US or in Europe, or a banking crisis here. So there are several options going forward.
Let me ask you about an option I just heard about. Read about that the Chinese going to a digital yuan.
Yep.
And even Biden made a comment that it could destabilize the financial system. Could that be one of them?
Yeah, that could be one of them, for
Okay.
sure. It's really difficult to get any decent prospects of what is the Bank of People's Bank of China actually trying to do. It's very I don't know. It's at first it sounds rather dystopian in a sense that they are really looking forward to kind of issuing a loosening the anonymity in all transactions would truly mean that you would have a kind of dystopian Orwellian economy or society. But then they are giving
Well, they already do, don't they?
yeah, in a sense, but yeah, they do. But that would be the ultimate one.
Okay.
Then you could be.
It could be worse than concentration camps in part of their.
Yeah, that's true. That's true. But this would mean that,
Okay.
for example, if they would, the People's Bank of China with the digital yuan would take over the whole like financial system, it would mean, for example, that you would jailwalk, and you would be notified that you have been fined for such and such amount because of jaywalking, and the money has been taken away from your account.
Wow.
Yep, that's the dystopia I'm talking about. So you
Okay.
you completely would lose your
Any rights to defend yourself.
yes. So and that's
Okay.
that's the kind of the most worrying end game there. But how it would affect the financial system? Well, yeah, that's a it's,
You know what I find ironic, and I'd like your viewpoint on it.
Yeah.
Well, we have to say that when Mario was president of the ECB and he said that he would do whatever it takes and took the euro down from about $1.50 and round numbers down to $1. He was successful. He did what, just by that definitely was a boost for Europe, taking the euro down, beggar thy neighbor. Wouldn't it be ironic that he's involved at the helm in Italy should Italy implode when he was so successful? And probably a lot of people are going to translate his success at the ECB to him being able to have success with whatever he's trying to achieve with that coalition in Italy.
Yeah.
And I think it'd be pretty ironic if he's a poster boy for both doing whatever he can and being successful for years, and then being the poster boy for the euro imploding because of Italy and what he's trying to do. What do you think?
Well, the thing is that he have managed to build this kind of a rainbow government just because other European countries, us, are giving them free money. But this is just an assumption. The recovery fund of the European Union is not ratified yet. So if it fails, it's very likely that the government of Italy will fail too. And if it fails, then they're quite close of leaving the euro. And this could be a trigger. Let's say we have a.
When is that vote? In May?
It's in Finland. It's in early May.
Okay.
So and here it's critical here because it's really close. There's a huge resistance among Finnish people against it, and politicians are slowly turning. So it may fail here. And just assume you're a banker. Let's say you're a Swiss banker, and then you find out, okay, the fund fails, and the political line of ramifications start in Italy, and then you start to think, would I like to borrow a lend to Italian banks when if they leave the euro, all the debt will be like redominated with the let's say 40 or 50% loss. And you will not do that. And then at that point, a banking crisis may start because the interbank markets will froze. And this is all that is needed. And then the European banking sector implodes. So that's the real big black swan here, which people are not really understanding.
This is the one that when we first started talking to each other, you thought could be the trigger, the fuse to light it. I also read in this piece that you sent, went over quickly, Tomas, that it could be something that happens like a quick spike in inflation, food inflation. I mean, the grains have been exploding, and that if we had some rapid inflation and the Fed responded and were so heavily leveraged, that could be it. And you also included the potential for social unrest and possibly people questioning the mental competency of President Biden.
Yep. Those.
How would that go down?
let me tell you this about the European banking sector, because not many know that.
Okay.
But in September last year, it was about mid-September, we got information that a major bank in Europe, in Central Europe, had declined of all banking collateral in the interbank markets. And this lasted for 2 to 3 days, but it scared shitless some of the traders, because they understood that if that happens, the interbank market freezes, and then you have a banking crisis, because the weak banks will start failing. And this lasted about 2 to 3 days. And then the big bank just said, okay, we're fine with this again. And this is purely inside information, but it told us, it showed everyone that the risk relating to the breakup of the Eurozone are real. And if they manifest even in the smallest level, it may ignite the European banking crisis. So we came really close of that ignition point last September. And if the fund fails in May, it may start like this all over
The
again.
domino.
Yeah.
Okay.
So it starts like really quickly. And this is the thing, that this is just this blog is just we published today. But this is something we try to warn the investors, that there are these massive hidden events that if they come to light or start happening, they will lead to massive kind of unraveling of the highly leveraged financial system within a matter of weeks. So that's, yeah, and the thing is that we don't know how well central banks would be able to respond to this. So this is a major risk. This is a major risk because central banks don't have access, in Europe especially, they don't have access in the interbank markets. They can just support the banks, but they cannot provide any funding on the interbank markets.
So is that dissimilar from the US?
Yeah, a bit, because you have the repo markets.
And there's problems there from some people I've talked to that still exist, that started last fall as well. And I've heard that it's been ameliorated, but it's still out there, that it's still not functioning correctly. Is that correct too?
And now when the rates rose, it created the kind of bigger problems there, because then you would have the kind of the specials rate, which is a rate which you use to lend against the collateral and the repo market. It can go to zero or even below, and you don't lend anything with zero rates, so it freezes the market. So that's one possibility what could happen. And the thing is that if you look at the junk bond rates, they are the lowest points. They're the lowest point in history. Doesn't make any freaking sense.
Well, at least back to the 1800s anyway.
What?
At least the rates are as low as they were here in the U.S. back to the Civil War in the mid 1800s.
But anyway, beyond the borders of the modern financial system.
Yeah. Okay.
So these are the things. There's really we call it the ticking time bomb called the Eurozone, just what we talked about. Then there's also the tremors in the US political system, like you have the several states pushing against the policies administered by the President Biden. And then there's, and the health of the president, I don't know, these are all these are small issues which are building under the surface. And if the US states start to rebel against the federal government, what will happen? So these are they're massive, small issues hidden in the below the unnatural surface of calm.
Yeah. So it's like having a stove, and you're preparing a complicated, great meal. You have a lot of things simmering and boiling and bubbling on the stove, and you have more than one burner. You have, at least 4 to 6 burners here. Okay, so one of our guests here today, Sansi, just posted something about Germany damaging European economy by raising German wages. What do you think of that?
Well, that's I don't know how would that hurt?
It's in the Guardian.
Yeah.
So anyway, that's what one of our attendees just posted here. So central bankers, it's all going to be the response, right? They still have bullets.
Well, they have bullets, if some bullets at least, if the inflation doesn't like break up, which is if you look at the inflation expectations and like some of the input prices, they are rising really fast. So I would be really surprised if we wouldn't see some kind of inflation shock within the next few months. It's just, there's a lot of pressures building. So I don't.
Okay.
Yeah. So. And if there would
So what I mean, I know you've believer in holding things with intrinsic value, but do you think the pound would benefit from this? Because I trade euro pound, and the euro pound had a nice recovery last week, pretty big recovery, where the pound was under pressure. What's your view on cable into a crisis like this? Is it going to be receive some flows from flight to safety, or will it all go to the U.S. dollar?
That's a very good question. I think if the banking crisis engulfs the European continent, the pound could possibly benefit, but it all depends on how well the UK banks fare it, and I'm not really sure about that. So I think it might start with the assets fleeing to the US once again.
Okay. Do you think gold, we had this big move, Thomas, in the gold silver ratio. At the peak, you could have turned in 1 ounce of gold and gotten 100 pieces of silver. And now you could get about, 68, 70. In an environment like this, is it going to be more of the monetary metal outperforming gold, outperforming silver? Is that your view?
No, we don't. This is the kind of the gold and silver market it's in a really strange place. The forces we don't actually know what's happening there. You hear rumors of the some strange buying in the silver, and I don't know. We haven't really had time to look into that now, but there seems to be something strange happening there also.
What and gold at these levels held 1680 basically in round numbers, 1675 down from its recent high. You like these levels, or could there be some type of what people aren't thinking about? Another with everyone's head turned towards inflation, could we have another deflationary shock with a black swan?
We could definitely, but I think what I worry the most is that we have kind of this big inflation shock with the declining growth, so it would be a stagflation shock, and in that case, I would see the gold skyrocketing.
And the market, and the market's being okay as a hedge of inflation, but commodity stocks outperforming the general market, or a stock market crash.
Yeah, well, this is the thing that with the system is so highly leveraged, so it's like any hint of faster inflation could spell the end of the whole thing, because the central banks would be needed to force to raise rates. So usually you would have thought that stock markets, it's a good place to hide for inflation, because it tends to rise faster. But in this case, if the rates have to go up, the leverage will have to be, there's going to be massive margin calls, which we already saw with the, forget the name of the fund that failed.
Bill Huang?
Yeah.
Arcapo or something.
Yeah. And so we saw kind of a small tasting of what will come. So with the inflation coming, rates rising, I would see the stock markets hurting quite badly. So we are in a strange world now. I don't think this will follow the same logic as before when it comes to crisis, because the system is so leveraged, so speculative, so fed with the money from the central banks.
What are you doing with your money, Thomas?
Keeping the golden in this firm.
Okay. Keeping you're in gold and investing in your business.
Yeah, basically. That's because I don't really see other reasonable options at the moment.
Okay. No cash.
Yeah, well, cash. Yeah, of course, naturally cash too.
Okay, and then denominated in what? Euro?
Euro here. Well, I'm keeping them in Finland for now.
Okay, but in euro, right?
In euro, yeah, as long as we have the euro.
Okay, well, if you feel this way about the euro, isn't it possible from Finland to, have your cash sitting in a different fiat?
Yeah, it could. I think the US dollar would be a good choice, but it's also. But the thing is, this I worry about what the Fed is doing. I worry. So when the crisis is over, will the US have been able to keep the US dollar? Will it be able to have kept the reserve status? I don't know.
Yeah.
Because
Okay, so we're living in the twilight zone.
yeah, we are, and everybody thinks that things are okay, but they are not.
Well, all right. Well, here, how do you respond to Forex Gal? I'm going to read it because she keeps typing it.
Yep.
Fed in control, no worries. What do you say to that?
They are not in control. They pretend they are in control. But if there is inflation, if there's unexpected shocks to the financial system, we don't know. We don't know how well they are able to respond. The thing is that if you talk to central bank analysts, they all say that the central banks will not nationalize or socialize the capital markets. That's what they all are saying. They say that there is a limit. We just don't know where the limit is, but there definitely is a limit. That's how we think. And if inflation comes, then there's nothing they can do. So this is a like I said, and these could be sudden movements. So we're talking now. What happens now? We don't know. Well, let's see if the April brings something interesting. But we will see. We are expecting the problems to grow all through the year.
It's amazing that Finland, what they need, like a completely unanimous vote by all the EU members for this thing to pass. And Finland is the last one to vote.
Well, I'm not sure with the last one because there was a delay.
So why are you? Everyone else has voted for it so far, right? And it's coming to Finland. Are you organizing a movement to reject it?
I have been.
Okay, so is the political environment in Finland, I'm not familiar with it, kind of anti-Euro. So it's kind of amazing that one country could dash the hopes of the fund, but that's the way it's coming down. It's kind of like the US where Georgia was important. You're Georgia in Europe, right?
Well, we hope to be. Because the thing,
okay.
The thing is that what people don't understand that the fund is actually opens the door. It kind of trashes the treaties, the European treaties, the economic treaties, and so that they don't exist anymore. So we would move in the state of unlawfulness here. And we cannot allow that to happen in Europe. We know what happens if Europe goes to kind of an anarchistic way. We've got the war again.
Yeah, we've been there before a couple times, right?
Yeah. So this is a bad idea in any case. The euro is already a failed currency. They're just trying to keep it up by any means.
Let me ask you this: all of these black swans are pretty much financial, aren't they? Yep. Except for maybe what happens with social unrest and things like that.
Yeah, and there's,
but aren't there a lot of isn't there a lot of geo risk? I mean, I saw pictures of Russian tanks on rails, huge numbers going into the Ukraine. Biden acting hawkish towards Russia and China. Could that be the black swan, some type of geo event?
We just don't forecast wars.
Okay.
But yeah, surely.
That he's going to respond to the hacking by Russia. And, it seems like the new Cold War has been on with China during the previous administration and wasn't with Russia because of, former President Trump's view on Russia, but Joe Biden's sure talking like a hawk.
Yes, yeah, he is, which is interesting. But
Okay.
let's see how it plays out. But the thing is that the European central security situation is not good either. So it's I don't. Russia is always they're always playing they're the opportunistic country because
Yeah.
they're not an actual superpower anymore, but they will act when they see a window opening. So these things could happen, and so often in history, if there's been a bigger political or economic crisis, the war has been the answer of many politicians to it.
Yeah, one of my friends says that most major wars start in July. Guy who does all these different
Well,
cycle
yeah,
things.
okay, yeah, that could be. So
Yeah.
let's hope not, but we don't know. And that
No.
the thing is that everything is it's a mess. It's a political, financial, economic mess. If you look below the surface, basically,
Yeah.
everywhere. So we are in this massive soup, as you said, basically, and we don't know where the boiling point is reached in all this, like cattle. So it's
Yeah.
that's what we have been trying to warn all through the spring, that there is something coming. We just don't know exactly what it is yet.
Okay. So caution as potentially, one thing that has me thinking that there could be something like this is that, how price is everything. S&Ps are reaching some price objectives of guys that made a call for 4,200 many years ago, and we're there. And even the bulls are starting to turn cautious on the market here. So
Yeah.
I think we're close in both price and time to
Yeah, and
pretty severe correction. And
there is. And let me say this: I just saw just before we began, I tweeted a message or a comment from Chair Powell saying that there's a slim chance of a repetition of the 2008 financial crisis. You don't.
the 2008.
Yeah,
Uh-huh.
slim chance. You never ever say
Say
such
that.
things as
Yeah.
a central bank. And so that's a huge red flag for me that there's something seriously wrong or brewing into the U.S. financial system too.
Yeah, he's starting to hedge himself. He only has a year left, I believe, on his term.
That's true. Yeah.
So he could be the perfect scapegoat if anything happens here in 2021, and then replace him.
A good point.
Okay. So anyway, again, I love batting around the Armageddon ball with you, Thomas, and and it's interesting. Your writings are great, and I recommend people follow you, go to you. As Thomas's Twitter handle is at MTMalanin, and to go to his website and keep in touch with which way these swans are flying and whether they're white or they're black. It sounds like we're kind of having another social issue conversation, but pay attention to this vote in early May. And Thomas, by the time you and I talk again, we could be living in a different world.
Yeah, that's exactly what everyone has to be prepared to.
So rooting for your safety and to thrive even in a crisis.
Yeah, and be prepared for everything.
Yeah. All right. Well, thanks for being with us today. Bro, you're my bro from Finland, and appreciate you sharing your research with us. And it's kind of interesting. We were talking about this as a future event, and kind of feels like we're near the doorstep. So I appreciate your work, Thomas. Thank you very much for sharing it today with us here at FACE.
Thanks.
Okay, that's a wrap for us, everyone. Remember, don't just count your black swans, count your blessings, and that you're going to have the foresight to be prepared for everything and anything. And that's a wrap. We'll see everyone for Turnaround Tuesday. Good hunting. Don't forget to join the team for the Morning Edge with Blake going over the bias chart and the rest of the team chiming in with their work. And we'll see everyone tomorrow. You're very welcome, Forex Gal and Galaxy and Monica. And glad you enjoyed the interview with Thomas. And we'll see everyone tomorrow. Adios.